Welcome to my backyard. Today we're going to talk about reverse mortgages, when they're appropriate and when they're not, and give you a little bit more general idea how they work. The way I can explain things is to go through real life examples that we've worked with over the years. Starting off with my grandmother, she was 104 3/4 when she passed away. I had cared for her for the last 20 some odd years of her life. And she had invested in AT&T stock actually when it was required that you get your husband's signature allowed to invest her part of her payroll check in AT&T stock. So she was pretty well set up. Between that and her AT&T pension, really didn't have a need for the reverse mortgage, but she had spent through her savings. When care is $250 a day, it goes pretty fast. She'd been to the point where, again, almost spending through her savings, but so we had the reverse mortgage in place as a reserve. She never used it. It was sitting there so she was comfortable that she would never have to, she had reserves to continue her care. Joni was 74 when we did her reverse mortgage. She had a small pension and a little bit of Social Security, but was really making tough life choices when it came to keeping up and paying for her ongoing care. She owned a home. She had a $600 a month house payment and some equity. Her house was worth $335,000, I believe, when we did a reverse mortgage. So what happened is the reverse mortgage contributed, she elected to take a monthly amount. So her reverse mortgage brought in $1,100 per month. So the swing between paying $600 for a mortgage and getting $1,100 a month was a swing of $1,700 a month. That was honestly life-changing for her. She had much more flexibility, and to this day, it's been many, many years, and she's still collecting her $1,100 a month. Don and Jeannie live in an upscale area of the Bay Area. House is worth $1.2 million or something like that. They had a mortgage of $265,000 and some credit card debt. They were struggling because his age and finding the kind of employment he was used to was a struggle. So a reverse mortgage was able to pay off their existing mortgage. It was to pay off their credit card and allowed them to stay in the area. Their choices were selling and cashing out and moving away, but they would have been far away from their grandkids and their family, which, they'd been here for 25, 35 years, that kind of thing. So they used the reverse mortgage to pay off their mortgage, pay off a little bit of credit card debt, and actually ended up with the leftover was in a credit line about $35,000, $40,000 that they kept in reserve. When to take Social Security is an important consideration and potential use of a reverse mortgage. If you're 62, a couple is 62 years of age or older, there's a 50% chance that one of them is going to live to be 92, and a 25% chance one of them is going to live to be 97. So you have to really consider, and you kind of look at the longevity in your family. If you could delay Social Security from the 62, which is early, 66, which is the regular, and then delay benefits until 70, if that could potentially work really well for your retirement planning. Let's consider John and Sharon. At 62, they could take $1,673 of their Social Security benefits, and if they were to delay and to 70 and get their extended benefits, that would grow to something like an extra $1,000. It's a really, really big number. And so what they did was got the reverse mortgage and supplemented their other income. They kind of went semi-retired during that time. Used the reverse mortgage to supplement their income, so they were just fine. And then, upon retirement, they were able to delay both of their Social Security and optimize it, and only get it after they were 70. Both of their parents had lived until well into their 80s, so that was an important consideration for them. I bet you didn't know you could buy a home with a reverse mortgage. Now, let's consider Fred and Marilyn. They were living in their, big home, 4-bedroom, the pool, what they'd raised their family in. And really, we're at a stage in life where kids are gone, grandkids are visiting, and that sort of thing. But they wanted to get, Fred's passion is golf, so they wanted to move closer to the golf course and kind of downsize. Their mortgage was $265,000, I believe, and so they were able to sell their home, get enough cash out of the sale to put a down payment on the new home. They put about $200,000 as it netted out into the bank, which helped in their reserves, their cash reserves. And they ended up with a townhouse right on the golf course. Somebody else took care of the yard and the maintenance, and they were able to kind of optimize their life, take advantage at that point in time to right size and to make things work for them, and put some cash in reserves and make things much better for them, a much better situation. With respect to incorporating a reverse mortgage in your financial plan, one of the most popular uses and most effective is the preservation of a portfolio. In every financial plan, an advisor needs to leave a certain amount of cash in reserve sitting, that's not invested, that needs to be, so it could be readily accessed. And sometimes that's between 18 months and 2 years, so that if you have a need for funds and the market happens to be turning down at that particular point in time, that you could still get your cash. And a use of a reverse mortgage could be used for that reserve. Now, maybe you don't use it, maybe you don't ever use it, but it's there so that your portfolio can be fully invested, and you don't have to keep a portion of it in reserve. That's one of the most common use of reverse mortgage is to pay off a mortgage and increase the cash flow to your monthly cash flow by not having a mortgage payment. But very important, and I think one of the most effective uses, is to have the reverse mortgage be reserved and not have to keep a portion of your portfolio invested in cash. I hope you found these brief examples useful. Your situation's going to be different, but I truly believe that a reverse mortgage should be part of everyone's financial plan. Sometimes it's just set on the shelf and used as reserves. Other times it's used specifically to take care of issues or create opportunities and that sort of thing that can really optimize your retirement and leverage and be able to live in a way that you deserve. That honestly, you've put money into this house for years and years and years, and now's the time that potentially just to take it out, take some of it out.